I walked into the interview. They asked me only one question. They said, would you do this job for $100,000 or drive a New York City cab for $200,000? And I'm shocked.
Today we have amongst us Prashant Kamath, who is the director at Houlihan Lokey, where he leads real estate valuation and advisory.
We deal with all asset types. A lot of the standard real estate asset classes, multifamily, residential, hospitality, industrials, all of that. But we also do what I call esoteric assets, right? Data centers, stadiums, casinos, funeral homes.
Do you feel that at certain point of time this will become a bubble?
Is it a bubble? Allbirds was a shoe company. Randomly from nowhere, they came up and said, all right, we're no longer going to be a shoe company. We're going to be an AI company. And the stock went up 700%.
What are the risks when you value data centers?
People realize but don't realize how big this issue is. It's technological obsolescence. Right now, you're building these billion-dollar data centers with the technology today. Who knows, 2 years from now, there'll be more efficient chips, more efficient, switches and gears and more efficient cooling systems.
From the lenses of long-term investments, when the hyperscaler come in, do they lease it for a long time, which makes it an attractive investment?
Hyperscalers are also interested in almost outspending other tech companies. It's a fight towards who's going to own the AI infrastructure of the future, right? So they're writing big checks as well.
So say someone is coming from marketing or sales and they want to step into the waters of investment banking. Would you say that's possible for now?
5-10 years ago, if you had to switch from one career to another, you would have had to take a degree, like an advanced degree or certification, like something. Yes, there is some truth to that and you probably have to do that as well. But I think over time, what will happen is AI will level the playing field.
If somebody wants to grow at the same pace as you did in your career, what are some of the skill set, the core skill set they should have?
Your reputation is currency, right? That's your currency. Deals can come and go, but your trust compounds, right? Protect it at all costs.
Hi, everyone. Welcome to the second season of Mindset Mixtape. Today we have amongst us Prashant Kamath, who is the director at Houlihan Lokey, where he leads real estate valuation and advisory in the Northeast. With more than 20 years of experience across banking, Big Four, finance, and real estate, Prashant has worked across portfolio valuation, fund advisory, and large-scale real estate transaction. He has also been very active in the spheres with discussion around data centers and impact of AI on digital infrastructure. So we're really happy to have you today, Prashant. Thanks for coming.
Thank you. Thanks for having me. For your audience, Lonija has really leveled up from the last season. So congratulations, and I'm glad to be here.
Thank you so much, Prashant. We're excited to have you. My first question to you would be about your career trajectory, right? You have had a very interesting career trajectory. You started off with consulting and then you moved to banking and now at valuation. So was this intentional or it were opportunities that shaped up this career journey?
Sure. So nothing was intentional. It was sort of by design as well. But like every immigrant that comes here to this country, I was looking for a good education to make a good living, lead a good life, follow the American dream, so to say. And then, hopefully give back to society as well. So that's how it started. I was born and raised in Bahrain in the Middle East to Indian parents. I consider myself Indian American right now. And, from there, I came to the, U.S. to do my MBA from the University of Rochester, Simon Business School. Shout out to them. And then, Simon. After that, I knew I wanted to get into finance because I had finance experience at Citigroup, earlier. So I knew I wanted to get into finance, but I wasn't sure what exactly. And I'm sure a lot of students go through that process. But I have a very interesting interview story here. One of my first interviews, I remember I'd applied to a very large institutional asset manager. And I got the call. So I went to the interview in person. And this guy, let's call him Jake, right? Jake interviews me. And, in those days, there was one of the rounds of the interviews was called a stress interview.
Yeah, that's pretty common in consulting.
And it's very, it's very interesting because it's meant to stress you out, right? It's meant to be combative and they want to see if you remain calm at the end of the day.
Yeah.
So here I am talking to Jake, and the interview was fine. Like we were talking, and then from nowhere, right, like completely unexpected, Jake starts talking in a very thick Indian accent.
Oh my God. That's quite telling.
And he does the head nod, and I'm shocked.
Yeah.
But and this is, the 25-year-old naive me thought, wait, maybe this is the stress interview. And now obviously I know better, but at that time, at that moment, muscle memory kicks in. I'm prepared for stress interview. So I was very calm. I remember I was smiling as well, like as if nothing had fazed me, right? I was just very normal. But what's interesting to see is seeing me be so normal and so unfazed, Jake started stressing out, which I thought was very interesting. I did end up getting an offer from that company, but I didn't join them for obvious reasons. And as for Jake, I think he's working at State Farm now. I'm just kidding. I don't know where he is, but good luck to Jake.
Yes.
From there, I went on to an energy trading firm.
Okay.
Very small firm. This is on Wall Street. That has an interesting interview story as well. I walked into the interview. They asked me only one question.
Okay.
They said, would you do this job for $100,000 or drive a New York City cab for $200,000? That's all they asked me. And, I'm like, I have to take a risk here.
Yeah.
So I got up and they're like, what are you doing? I'm like, I'm going to drive the cab. Like, okay, sit down, right? So I did that. We were trading energy options for, for like 2 months or so. And that's when I realized trading options was not for me. I wanted something that was more stable. And then that's when I got my break at Deloitte. That's where I had a long, successful career. I worked for about 9 years there. We were working on some pretty large clients. I was working in real estate and valuations. It was, a new field for me. But it was also a very interesting time because, I was there during the subprime crisis. And, it affected my business directly, right? I was in real estate and in finance. I got to see a lot of layoffs very early in my career.
Yeah.
But it also became a good training ground because when times are good, it's very easy to value and price something, right? But when you don't have transactions, how do you value things then? And, that's when, I really started looking into all the technical details and, how do you value something that is, generally more illiquid and stuff like that. But yeah, working at Deloitte was really nice. I would always raise my hands for like any tough assignments. I would be very proactive and, that's sort of, like it ingrained in me that hustle culture, right? And that's something
hustle
that I really,
New York.
And then from there, I moved on to Houlihan Lokey, where I still am. I lead the real estate advisory practice for the Northeast. I was employee number 1 when I joined. I don't have any funny interview things there, but I was employee number 1. In the Northeast, I got to grow the practice, both number of people and clients, and so business was good. We deal with all asset types. A lot of the standard real estate asset classes. Multifamily, residential, hospitality, industrials. All of that. But we also do what I call esoteric assets, right? Data centers, stadiums, casinos, funeral homes, everything has a value. And, we work with a lot of private equities and hedge funds to, value both debt and equity structures as well. So, yeah, it's been an interesting ride.
Yes. And also the most important part is that Prashant graduated during the housing crisis, right, in 2008. So to navigate that and be here, in itself speaks volumes. Well, shifting gears a little bit, you have been active in the spheres of data centers and integration of AI and digital infrastructure. But before we dwell into the specifics of that, would you like to give the viewers a little synopsis and maybe a primer on the key terminologies?
Sure. So data centers is an interesting business, right? We all know it's in demand, but it's important to understand certain key concepts, right? Especially for your viewers. So one of the things, that you'll hear in the news, hyperscalers, right? What are hyperscalers? So think of these as the Amazons and the Metas and the Googles of the world, where they're building out large data centers. They're usually self-building, and they own the entire building. They're usually massive, 50 to 100 megawatts. To give you a sense of scale, that's enough to power 40,000 to 80,000 homes.
Wow.
Right? So these are massive buildings. And then you have another set called colos or colocations. Think of them as data centers where other multiple companies can rent. They can rent rack space. You have service agreements where you rent out power and internet connections and all of that. So if hyperscalers are like a large mansion, colos is an apartment building, right, where there are multiple tenants. And so that's sort of an easy concept to understand. And then, apart from that, there are a few other concepts. One, data centers is sort of real estate because it's like a shell building, but they're also infrastructure assets, right? They have long-term stabilized cash flows that resemble, infrastructure assets. But they're also operating companies. They're and because they're operating companies, we look at them as valuing from an EBITDA multiple and things like that. But then unlike real estate, data centers, when it comes to real estate, you're looking at square footage, right?
Absolutely.
Bigger the square footage, likely more value, right? That's not true with data centers. There's no concept of space. It is only power, right?
Okay.
Everything is power related. Your contracts are power related. And higher the power, the more lucrative it becomes for some of these large tech companies to come in. So it's all based on kilowatts and megawatts, right? That's sort of one key difference when it comes to real estate and that. And then the last thing I'll say is probably something people realize by now, but gone are the days where data centers are considered like normal, niche real estate assets. Right now, they are considered mission critical infrastructure assets, right? We saw what happened with the conflict in the Middle East, where Amazon AWS data centers were targeted. That tells you everything you need to know about how important they are to the economy.
So Prashant, I have another question for you. What are the risks when you value data centers?
Sure. So it's very easy to value real estate, right? There's a lot of different, there's a process and a methodology. With data centers, it gets a little challenging. The first thing is, land. There's this concept of powered land where, you have land, and then you have different things that take place, which adds value to that land before you build the data center, right? Because you need power first to build.
Okay.
So, you have land, then you have zoning, then you get interconnect rights. You have various things that happen. And within that process, the value of the land keeps changing.
Oh.
And so something that, so institutionals are buying, let's say, agriculture land for $10,000 an acre. Once it becomes powered land, it could sell for $1 million an acre, right? I'm talking like 100x return, which is crazy, right?
Yes.
But that's there because there is demand. So that almost becomes like a separate asset class. So one of the risks is just valuing powered land. The other thing is lease complexity. Like we talked about colos, where you have so many different tenants. Each tenant, each company leasing might have a completely different service agreement on how much they're paying. Some want power, some want other things. So it becomes difficult to model it out. It's just a risk. I think that this third point is probably the most underestimated thing. People realize, but don't realize how big this issue is. It's technological obsolescence. Right now, you're building these billion-dollar data centers. with the technology today. Who knows, 2 years from now, there'll be more efficient chips, more efficient switches and gears, and more efficient cooling systems. I heard there's even new technology where the way you design server racks and all of that. So the $1 billion thing that you just spent in 2-3 years might not be the latest, or they might be very slow compared to other data centers. So there is risk of technology being obsolescent, right? Much sooner. So that is a risk of modeling out, because you need to know how much capex to keep adding, for these data centers. The other thing is also, energy exposure, right? A lot of these data centers, need power. But how do you price, power? Like, you have your electricity that keeps going up every year.
Yeah.
How do you project that, 10 years out when you look at cash flow? So that's something that is a risk as well, that you need to make sure it's, within
the location,
reason.
I guess, and the distance would be a major factor to that.
Distance and location, not as much. It's just, the cost of power, right? Like how much kilowatts you're using. Usage, like we know what usage is going to be there. We're just not sure how expensive electricity will be over that 10 years. And just projecting that out might be a risk. And I think the last risk is pretty common. If you have a condo or a house, if you want to go sell it, you will look at Zillow and you'll get 100 different houses. So you have a sense of what the value is. For commercial real estate, you have websites like CoStar and others that help you do that. For data centers, it becomes challenging because there aren't many transactions, right? So now you have to value something where there aren't, many things. So, there are different approaches we use, but I wanted to sort of talk to you about how it is very challenging to value some of these data centers.
Got it. To summarize it all, I would say 3 points. First would obviously the evolving space of AI infrastructure. They're changing as a result. That might affect. Second would be, as you mentioned, changing cost of electricity.
Cost, I think cost is the big factor.
And third would be the location of the real estate might be volatile.
Correct. I mean, the location, so, companies are moving to locations that are more remote because it's not going to be a constraint on their power grid, or they're not going to inundate their power grids, right? So that's sort of a trend that we're seeing, but you never know.
Absolutely. I have a follow-up question on that. I'm very curious on this topic, and firms like JLL has also predicted that by 2030, this will in fact double in terms of investments. But we have also seen along the lines that there are constraints like power constraints, timeline in terms of real estate projects. Do you feel that at certain point of time, this will become a bubble rather than an investment? And also, from where you sit, do you see this as a long-term investment?
Okay. So one thing to be sure, and I should have told this upfront, whatever I say are my personal views. They don't reflect the views of my company. These are my personal views. I wanted to give that disclaimer. I should have told that earlier. Your questions are very interesting. So yes, when we discussed power, there are power constraints. People are upset that their power bills are going up, and they want to make sure that these $1 trillion so-called tech companies, need to spend on other things, right? They need to have skin in the game. One thing that's changed is there are different sources of power that they're going to look at now. So it's not just the grid. They're looking at nuclear power. They're looking at gas turbines, looking at sustainable power as well through solar and other means. So that's there. Some of the states, interestingly, are also saying, bring your own power, right? If you want to come and build a data center, build a power plant first. And that's fascinating. I'm currently working with several clients that are actually doing that. They have large tracts of land. It's all zoned for data centers. They're first building power plants and sort of, acquiring power through various means, and then looking at the construction. So, that sort of mitigates some of the, power constraints.
Also, from the lenses of long-term investments, when the hyperscalers, as you mentioned, when they come in, do they lease it for a long time, which makes it a attractive investment?
Correct. So that's what they do as well. So these are hyperscalers are generally long-term leases. So in fact, when it comes to investments, there are different investments have different sort of different players have different mindsets, right?
Okay,
So
okay.
private equity players and hyperscalers are more aggressive. They're writing larger checks. They're driving deal volume right now. Private equity players realize that it's a long-term gain. They can put in money now, and there's a good outcome in the future. Same for hyperscalers. Hyperscalers are also interested in almost outspending other tech companies.
Okay.
It's a fight
Typical of them.
towards who's going to own the AI infrastructure
Yeah.
of the future, right? So they're writing big checks as well. What's interesting is a lot of the public companies, the REITs, they believe in AI, they believe in this whole economy, but they're being cautiously optimistic.
Okay.
And the reason is they don't want to write large checks, which is going to have a direct impact on their earnings now.
Okay.
Right. So
Okay. Yeah.
they're being selective. They still believe in it. And it's also true for lenders, right? A lot of the construction lenders, they believe in it, but they're not lending willy-nilly. There are a lot of
Exactly.
speculative things
Yeah.
that they're not doing. So they're lending more for things that are, that are assured. There are power agreements in place, pre-leasing, all of that. And then in terms of, is it a bubble? I'm not going to answer that directly. I will, I think your viewers might have heard of Allbirds. Allbirds was a shoe company. For the longest time, was private equity backed. They IPO'd sometime back. Stock wasn't really doing well. And then from nowhere, I think about a few weeks ago or a month ago, randomly from nowhere, they came up and said, all right, we're no longer going to be a shoe company. We're going to be an AI company. And the stock went up 700%.
Oh my God.
To me, that screams pets.com for people who are aware of that. It screams, things that we've seen in the past. So it smells like a bubble. But again, as long as there are big tech companies writing checks, it's just going to be, sustained for the future.
Absolutely. I think a similar thing we discussed earlier happened with Glossier, which is a beauty brand, and they transitioned into tech, but in their case, they tanked. But I guess in terms of Allbirds, it kind of worked out. I wanted to shift gears again a little bit and focus on commercial real estate as a whole. So it feels like the market is still digesting a few major blows from interest rate, difficulty in getting refinanced, and also the long tail of COVID, which is specifically affecting office spaces. So from where you sit, where do you think these changes are going to affect, especially the commercial real estate industry in terms of office spaces?
Capital is being more selective. I think, across all commercial assets, people are being more selective on a deal-by-deal basis. That old adage, the rising tide lifts all boats, like that's likely not going to happen. There are pockets of things that are doing well, and then, there are other asset classes that are not. Investors are underwriting for quality, location. So they're being more stringent in their underwriting process. There's a very clear flight to quality, right? That's taking place. So investors are still investing. There is dry powder out there. Investors still have money to invest, but they're investing on selective assets that have higher quality, well-located, modern industrial buildings, multifamily in supply-constrained markets, data centers we talked about, grocery-anchored retail stores. So there are pockets of real estate that are doing well and capital still flowing. In terms of office, it's been an interesting ride, so to speak. Think of it as two different markets. You have Class A trophy office buildings in larger cities, well located, recently renovated. They're well amenitized. I talked about my building where there's a new gym and a rec center and all these things. These buildings see transactions. There are volume there. People are interested in investing. They're not going anywhere. On the other hand, you have Class C, Class B suburban offices that have higher vacancy, 20, 25%. They are, a lot of them are distressed. The delinquency rate for office is about 10, 11%.
Wow.
That's loan, delinquency. You would think that's high. It's not as high as, the peak when it was about 20, 25%, during COVID or even before that. But it's inching up, right? It's inching up. It's not comfortable, but it's there. Because of that distress, you see more distressed capital now, right?
Okay.
People are coming up with very innovative ways, pref equity, mezz, and just a lot of different security types to, pour capital in it to get a higher return. We've seen banks, especially the suburban banks, are being very cautious on offices. They're not lending as much, which I would say is probably good because that leads the door open for private credit and private capital to come in. That's what we've been seeing for the last, several years. So it's, there is capital. It's just who is paying for it, right?
Exactly.
Who would hold the bag at the end of the day is what they're worrying about. So, long story short, transactions are decent. Volume is there. It's not as high as, pre-COVID for some of the asset classes, but, I would argue it's still doing fine. Offices, 21, 22, 23 weren't doing well. End of 24 and 25, it picked up. People started coming back to the offices. Transactions were there. We saw some larger transactions and refis. 26, has been a slower start because of, various geopolitical things, but it's still sustaining, and, we're hoping to, have a decent year.
Okay, that's really interesting. Well, I do have a few questions for you along the lines of your career, and that would interest the people who are just graduating out of, business school.
Okay.
So when I was in business school, obviously almost half of the batch, since Simon is a very finance-heavy school, wanted to go into banking, and there were a lot of people who wanted to break into real estate investment banking. So for those aspirants, what would you say that some of the skill sets are that they should hyper-focus on if they want to get an offer, despite all the challenges that are happening?
Sure. Challenges are good, right? The whole point, if you don't have challenges in life, then you're not going to enjoy it, right? You need a sense of challenge. I think, I have a few points listed here. I think most of the students understand this, but sometimes you need to hear it out to sort of, if you're looking at anything in finance, if you're looking to switch your career, you're looking at, finance or real estate, at the end of the day, you have to be good at understanding, you have to be good at financial analysis, right? That's a given. You need to do deeper dives. You need to be comfortable with cash flows and analyzing it and projecting it out. And so that's like the basic.
Yeah.
The second I would say is, you should not just be good at Excel, you need to master Excel.
Yeah.
That's like,
Yeah.
there was a funny story when during my class where one of the interviews asked him to model it.
Yeah.
And, he was playing on his BlackBerry on the other hand. He was playing some game and he was modeling. There are so many funny stories like that. But, the point is you have to really be good at Excel.
Yeah.
If you're in real estate, learning Argus is a plus. Argus is a specialized tool that we use in real estate. So that I think would be key. The third I would say is AI. Interestingly enough, this year onwards, we've been almost making it mandatory to ask people during interviews, what sort of AI experience have you had? How comfortable are you with various LLMs? Are you creating efficiency, agents, things like that? Like how are you analyzing data? How are you prompting? Like all of that, I think is really important. Irrespective of which field you are, I think just understanding AI, leveraging it, I think is really important. And then some of the other stuff is a given. This good communication, being proactive, all the regular stuff that I'm not going to go through, but, just study the markets, follow the deals, be intelligent enough to, stand and talk about these deals as well, I think is important. But yeah, these are some of the basic things.
Yeah, it's interesting that you mentioned about Excel.
Yeah.
ChatGPT, Claude, all of the other tools one side, and Excel is here to stay for
Right.
the last 10, 15 years.
There are trillions of dollars riding on
Yes.
an Excel sheet. So yeah.
Exactly. It's interesting that you mentioned the use of AI in your industry. And I want to ask this through the lenses of people coming from different professions. As I am second year post my MBA graduation, I have seen a lot of my friends talk about pivoting careers.
Yep.
And with the advent of AI, they feel like, okay, now it's much more possible for us to transition into a different industry than it was like maybe 5 to 10 years back. So say someone is coming from marketing or sales and they want to like step into the waters of investment banking. Would you say that's possible for now? Because earlier, if you don't like interview right out of business school, that was something that's not possible at all. But would you say like now mid-career transitions are still possible, or it's still like very difficult to get in?
So that's an interesting question, and let me answer that along with maybe some AI fears that some of, because I talk to a lot of students and they're saying, wait, like, is there going to be a job for me? Am I going to be,
Absolutely.
So let me answer both of that. And I think 5-10 years ago, if you had to switch from one career to another, you would have had to take a degree, like an advanced degree or certification, like something. Now, yes, there is some truth to that, and you probably have to do that as well. But I think over time, what will happen is AI will level the playing field, right? You have access to knowledge, especially for smaller changes and, not something that's very dramatic, but for smaller changes, you have the ability to level up, to skill up, to build skills very easily, almost free. And I think that, will have an impact on how people switch careers. It may not happen, very soon, but over time, that switching cost, you don't have to spend years mastering something. It'll be much faster.
Yeah.
So I think that's there. So AI will, reduce the friction of career transitions, right?
Yeah.
The second is, I think AI rewards motivation more than just background, right? If someone were to come and say, oh, I spent 2 years on this and I did fine. But I think someone who is really motivated to do well, to skill up, to take the time and learn prompting and do all of that and, upskill themselves and learn something. And, I think people like that are going to be rewarded compared to just sit back and say, all right, I'm just going to rest on my laurels. That's not going to happen. I also think that there is value for human skills, right? AI can't do everything. There are certain human skills that might be more valuable in the future, right? Negotiations, you have judgment, relationship management, salesmanship. Like these are things where, are more fictitious in nature and something that, you need to have, but it's not something that AI could do immediately or, it's going to take time.
Yeah.
So these skills might be more valuable to have. In finance, AI can help, help like in finance and real estate, AI can help, faster underwriting, research, like something that would take 3-4 days can happen in minutes now. So I think there are a lot of benefits that are there, to AI in general, but also, clients want to talk to a person, right? You're talking about millions of dollars of transaction, billions, in some cases, they want to talk to someone, physically, right?
Yeah.
They're not going to listen to an algorithm saying, hey, we want to pitch you and this is, maybe that's the future, but it's going to take some time to get there. And I think till then, there's nothing to worry. When it comes to the fears of AI and what's going to happen and, are there going to be jobs and so it's a lot to cover. But listen, I think people acknowledge and believe that AI is here to stay. It is a tremendous power that people have. How you leverage it is key. Yes, there will be some jobs that are going to go. There are also going to be other jobs that we just don't know exist right now. As a student, you just have to be prepared for that.
Yeah.
You need to work hard, you need to upskill, you need to do all of that. You need to leverage it so that you can, you can be, if we had 10 people before doing the same thing, maybe we have 6 now or 5. You should aim to be in that 5, right?
Yeah.
And so it's you would need hustle, you would need all of that to get into that. And, longer term, I think, we still believe in the sector. We think it's going to do well. Some jobs are going to be replaced, but at the end of the day, we will be more efficient. Capital will be more, efficient as well. So,
Got it. I do have a follow-up question on
Sure.
that. As you mentioned, like we should definitely aim to be in that pool of 5 to 6 people who survives the layoffs. But on top
I wouldn't
of
call it a layoff, but okay. Yeah.
but would you say that in the coming days there'll be more individual contributors and the middle management will thin out? Do you think that's going to be the next thing that corporate is going to implement?
So I think it's going to affect everyone. It's not that it's going to be, like a lot of people feel, oh, right now it's only affecting, junior people. Maybe in the future, I think, if you ask me, technically no one's job is safe,
Yeah,
right?
yeah.
But at the same time, it is how you upskill yourself, how you sort of get there.
Mm-hmm.
I do think there'll be some thinning of forces, and it'll be a more flatter work culture. You already see that in a lot of tech
Yeah.
companies and a lot
Yeah.
of other places. But yeah, to answer your question, I think there will be some thinning out, eventually.
Yeah, absolutely. And I think we both can agree on the fact that sales is definitely here to stay. It's an evergreen skill set that cannot be replaced by AI. So, do attend the negotiation classes. And although they are rough, but they're worth it.
Actually, AI is also pretty, a friend of mine wanted to take me to a car dealership because she wasn't sure how to negotiate. I've never gone to a car dealership in a very long time. And I'm like, how do I, I literally went on ChatGPT, like, what do I need to say? What will they tell me? How do I respond back? How do I get the best deal? And we got like a $15,000 break on
Oh
it.
my
Like
God.
I was able to leverage AI to get a cheaper deal. And ChatGPT did help me negotiate
Yeah.
better. But yeah.
Before we close the podcast, I do want to ask you about your personal philosophy. If somebody wants to grow at the same pace as you did in your career, what are some of the core skill set they should have?
This might sound a little preachy, but
Jai Shetty
this is
moment.
based on my experience, and it's something that I want to share. I think one thing is you have to understand people's motivations, right? Whether it's your boss, whether it's clients, whether it's your professors, what are they asking for? What are they looking for? What are they expecting you to do? And once you understand their motivations, you can frame your response and your actions accordingly. So just getting better at understanding people's motivations, I think, is key. Real estate and financial markets are all a cycle. It is important to remain humble, right? Don't assume brilliance in a bull run and don't assume failure in a downturn,
Yes.
right? You have to be humble. I can't tell you how many times I've seen people with massive chips on their shoulder,
Yeah.
and it just takes one, layoff or one thing to they just completely change.
Yeah.
So, just be humble. And I think that's something that's, that MBA classes don't necessarily train you.
But Virat Kohli does.
The other thing I have here is your reputation is currency, right? That's
Yeah.
your currency. Deals can come and go, but your trust compounds, right? Protect it at all cost, right? That's your reputation. If you did something wrong, own up to it. Say, listen, I messed up. That's not normally me. It's not reflective. Tell me what I need to do to get it better. Take ownership. And I think that's sort of, part of it. The next one I have is learn the numbers, but don't forget the people behind the numbers, right? Real estate is as much as a relationship business. It's the same in finance as well, as much as it's about IRRs and cap rates and multiples, right? So think of the people as well. And this is going to sound cliched. Get comfortable being uncomfortable,
Yeah.
right? I think this to me was one of my secrets to do really well. Embrace being uncomfortable, raise your hands for tough situations. People will remember you, right? Your bosses are going to remember that, oh, you know what? I asked Prashant to go to Minneapolis in the middle of winter on Christmas
Oh my God.
for a project. And, it was one of the biggest projects for the firm. I raised my hand and said, fine, I'll go, right?
Yeah.
These are things where people remember. Just, be willing to do tougher projects. because it is a risk. It is a risk, but there is also a chance that you might do really well. And if not, there is learning. You've learned something from that project that the 10 other people that did not raise their hand would never know.
Never know. Yeah.
And that's how you learn and grow in your careers. I have, play the long game, right? Don't worry about short-term, fixes. And a lot of people try to chase designations and listen, or maybe they didn't get the promotion in a year. Fine, brush it off. You'll feel bad for a day, brush it off. Next year, get that promotion or look outside for another job.
Yeah.
But you're not here for 1 or 2 years. You're here for a long-term career, right?
Yeah,
So
yeah.
think long-term, have your eye on the prize, and go from there.
Okay.
And then the last thing I have is seek mentors, right? Seek really good mentors that can help navigate. We all have life's challenges, right? And a mentor will help you identify and navigate some of that. But I also have the flip side where once you get to a point, you should be a mentor too. You should have that in you where somebody helped me, I want to give back.
Yeah.
For me, it was the other way around, where I did not have a lot of people that guided me. I do have now, but when I started off, so now I always feel like what, I know people can be lost, which is why I try to guide them on what to do, and and I might not be right 100%, but I at least I come with sincerity, and people realize that, and people see that. So.
Yeah. Well, those were some really strong points. Thank you so much, Prashant, for sharing that with us today. And it was amazing chatting with you. Hopefully you come back for season 3.
I will. I will. If you call me.
Absolutely. Well, thank you so much.
Thank you. Thanks a lot.